It's the evening of January 15th, 2026, and the silver market just took a brutal hit. But here's the twist. While silver itself got hammered, the companies mining it barely moved. In fact, they're showing something the media doesn't want you to see. A quiet strength that screams this isn't just a market correction, it's manipulation. You see, silver dropped 4% at the open this morning, enough to trigger stop losses and rattle the average investor. But the miners barely flinched. Why is that? It's not because they're weak, it's because they're being held down. And here's the kicker. Tomorrow, everything changes. This isn't a random drop, it's a setup. And the big players behind the scenes are playing a dangerous game. Why is nobody talking about this? Stick around and I'll explain exactly how this game works and why tomorrow could be the day everything unravels. Let me break this down for you. What you saw this morning, silver getting crushed, wasn't an accident. It was engineered. At 9:45 a.m. Eastern, the price dropped 4%, shaking out weak hands, triggering stop losses, and causing panic. The media is calling it a cooling period, just a normal market dip. But that's a lie. That's the narrative they want you to believe. They want you to think that silver's bull market is over, that it's time to move on to something else. But that's not what the numbers are saying. Look closely and you'll see a pattern. Silver dropped 4%. The miners only 1.4%. And by midday, they'd already bounced back, nearly erasing all losses. That's not weakness, that's strength. And if you're watching carefully, you'll realize it's not just a fluke. This is the market telling you that something huge is coming, and the official story, it's wrong. So what's really going on here? The miners aren't reacting like they should because they're being suppressed. But why? Because tomorrow something massive is about to go down. Now, here's where it gets interesting. While silver was getting slammed, the miners stayed strong. Think about that. At 9:45, silver dropped 4%, but the miners barely budged. You don't see that every day. And when the miners started to recover, that was a huge signal. It's a clear sign of institutional defense, not retail traders jumping in. This wasn't some random bounce. This was a strategic move. But here's the thing. Nobody's talking about it. You won't hear this from the mainstream media. They're not showing you the data. They're not showing you the bigger picture. Why is that? Simple. It exposes a mechanism that they don't want you to understand. The miners are being suppressed. They're being held down artificially to protect massive short positions. And if that wasn't enough, here's what the data is screaming at us. The gap between silver and the miners is widening. At $91 silver, these mining stocks are priced like we're still in a $30 silver environment. That's not normal. That's an anomaly, and it's a dangerous one. This disconnect can't last forever. The math is clear, and I'm about to show you why the miners are on the verge of a major breakout, and it starts tomorrow. Now let's look at the bigger picture. This situation is escalating quickly. And when you start connecting the dots, it's clear that this isn't just a market blip. This is part of a bigger play. Think about the last time we saw something like this. Back in 2010, during the last major precious metals bull run, we saw silver soar. But the miners, they lagged for months before exploding. And I'm seeing the same pattern now. The miners are lagging, but once they catch up, look out, these stocks are primed for explosive growth. And the gap between the miners and the commodity price is going to close fast. But here's the kicker. This isn't just a trend. This is a battle between the banks and the market. The banks are holding down the miners to protect their massive short positions. But if silver breaks above $92 and the miners start to take off, we could see a scenario where the banks are forced to cover their shorts. And that's when the real volatility hits. When shorts have to cover, the market will move in ways that don't make sense on the surface. But they'll make perfect sense when you understand what's at play. And this whole thing could blow up in the banks' faces. But wait, it gets even better. The proof that this suppression is intentional is in the numbers. The disconnect between silver's price and the miners' valuations is staggering. As I mentioned, silver's at $91, but the miners are still stuck in a 30 silver world. That's not a slow reaction. It's a deliberate mispricing. These miners are printing cash at $91 silver. The profit margins are insane, but the stock prices are still stuck in the past. And here's the big red flag. The margin expansion is undeniable. When silver was $35, the miners had thin profit margins around 14%. But at $91 silver, their margins are up to 67%. That's a huge leap, and it should be reflected in the stock prices. But it's not. Why? Because the market's being manipulated to keep these stocks undervalued. But that's about to change. The operating leverage is too strong, and at this point, it's a mathematical certainty that the miners will have to catch up. The question is, when will it happen? If you're waiting for the media to catch on, don't hold your breath. The mainstream narrative is missing this story entirely. But if you understand the math, you'll see that the miners are set to explode. And tomorrow, we could see that first spark. Now, let's stack a few more pieces on this. The pressure's mounting, and things are accelerating faster than anyone realizes. We're seeing a rapid series of developments here, and they're all pointing to the same thing. Silver miners are about to break free. First, we have the massive options expiration coming up tomorrow. That alone is enough to trigger wild swings. But then there's the short interest in mining stocks, especially in companies like Hecla Mining, HL. The short volume is through the roof, and this isn't some sophisticated hedging. This is desperation. These shorts are holding on for dear life, trying to suppress the miners and protect their positions. But if the miners start to push higher, if the $92 level breaks, then all those short positions will be forced to cover. That's when the real chaos begins. You'll see volatility, you'll see moves that don't make sense at first, but when you understand the positions behind the curtain, it's clear. The market's being cornered. What happens if this continues? If the shorts lose control? It's a game changer. And the best part, this is just the beginning. Now let's shift the focus to you. If you're watching this, you might be wondering how all of this affects regular people like you. Well, here's the truth. This isn't just a story for traders and investors. This has real consequences. For years, the silver market has been undervalued, manipulated, and ignored. But when these miners catch up, when their prices finally reflect the reality of $91 silver, it's going to affect more than just your portfolio. It will affect the broader economy. People will start to take notice of silver again. And when that happens, the media will scramble to cover it. But by then, the easy money will have been made. If you're in the know, you can be ahead of that wave, but most people won't catch on until it's too late. The miners are set to explode, but the public still doesn't understand the opportunity. If you've seen this before, if this feels familiar, then you know exactly what I mean. And if you're not sure, just wait and watch. The action is coming fast. Let's zoom out for a second. Beyond the immediate volatility, there's a deeper mechanism at play here, one that most people don't even realize. The reason silver miners are suppressed is all about leverage. It's about creating a spectacle, keeping investors distracted, and using fear to maintain control. But the system is rigged in a way that only benefits a few. Banks, institutions, and big players. You see, when prices get too disconnected from reality, like we're seeing now, it becomes a self-fulfilling cycle. The banks keep pushing down the miners, keeping the stock prices undervalued, while the physical market, the actual silver being mined, screams for higher prices. But here's the unsettling truth. This game can't last forever. The leverage, the incentives, the manipulation, it all adds up to one thing: collapse. And when that collapse happens, it will happen fast. And if you're not prepared, you'll miss the whole thing. This isn't just about silver. This is a test of how far these systems can stretch before they break. So where do we go from here? The next 24 hours could set the stage for two very different outcomes. On one hand, silver could stay suppressed, manipulated by short positions and the pressure of options expiration. If that happens, it's a sign that the banks and big players are still in control. We could see another round of volatility, more false dips, and more games being played. But here's the other side of the coin. If the miners start to break out, if silver holds above $92 and the miners start to decouple from the metal, then all bets are off. The suppression will fail, and we'll see a massive shift. The shorts will be forced to cover, the volatility will ramp up, and the entire sector will be repositioned. And once that momentum starts, it's hard to stop. We'll see the miners catch up to the silver price, and when they do, the gains will be astronomical. But don't think this will be easy. We're in a period of uncertainty, and we can't predict exactly how it will unfold. But one thing's for sure, the next move is already in motion, and if you're paying attention, you'll be ready when it happens. Here's the bottom line. Silver is at $91, but the miners are still stuck in the past. That disconnect is being forced by massive options expiration tomorrow, January 16th. The math behind operating leverage shows this is the most undervalued sector in the entire macro landscape. The numbers don't lie, but the prices do. Tomorrow, the paper market will meet the physical reality of silver, and that's when everything could break wide open. But this isn't just about one day of volatility. It's about a larger structural shift that's been been building for years. If you've been watching, you know the opportunity is right in front of you. The setup is there and the smart money knows it. If you're not in position yet, tomorrow might be your last chance. Stay sharp, stay disciplined, and don't let the noise distract you. If you want to stay ahead of this, if you want to understand how this all plays out, make sure you're following for more updates. The real action is just getting started.